Let's begin with a striking reality. Dubai's glittering skyline, once celebrated as the crown jewel of the Middle East, now appears to stand in the shadow of a powerful new development. Leaked documents have revealed an extraordinary $500 billion strategy from Saudi Arabia, a master plan that appears carefully designed to challenge and potentially dismantle Dubai's long-standing economic dominance across the region. And here lies the detail often overlooked by tourism campaigns and corporate headlines. This situation is not simply a rivalry between two ambitious cities competing for attention. What we are witnessing is something far more consequential, a gradual restructuring of economic influence across the Middle East, one that may reshape regional power for decades to come. The uncomfortable possibility is that Dubai's golden era, an era built on bold ambition and rapid expansion, may now be approaching a critical turning point. To understand how this moment has emerged, we must look closely at the financial maneuvers taking place behind closed doors, the quiet strategic decisions shifting capital and influence, and the wider implications for business and tourism across the Gulf. For perspective, it helps to return to the 1990s and early 2000s. During that period, Dubai appeared to enjoy a clear and largely uncontested path toward regional dominance. There was minimal competition, immense ambition, and leadership determined to transform what had once been a desert trading hub into what many described as the Singapore of the Arab world. Under the leadership of Sheikh Mohammed bin Rashid, Dubai pursued an aggressive diversification strategy. While many neighboring economies remained heavily dependent on oil revenues, Dubai deliberately chose a different path. It established a tax-friendly environment designed to attract multinational corporations, global investors, and millions of expatriates seeking opportunity. The results were remarkable. Dubai built the tallest building on Earth. It constructed vast artificial islands shaped like palm trees, visible from space. It even developed indoor ski slopes in the middle of the desert. For years, the formula appeared flawless. Dubai did not simply prosper, it became a global symbol of ambition, luxury, and modern connectivity. But somewhere between 2016 and today, the balance of power in the region began to shift. Saudi Arabia, long perceived as a quiet neighbor, focused primarily on oil exports, began positioning itself as Dubai's most formidable challenger. The decisive moment came with the launch of Vision 2030. Led by Crown Prince Mohammed bin Salman, widely known as MBS, the initiative was not merely a reform program. Strategically speaking, it represented a sweeping economic transformation aimed at redefining Saudi Arabia's role in the global economy. And crucially, that transformation placed Dubai directly in the kingdom's competitive crosshairs. Initially, many observers dismissed the vision as overly ambitious. Some even described it as unrealistic. Yet over time, Saudi Arabia's strategy has evolved into something far more calculated, a coordinated effort to compete directly with the industries that once secured Dubai's dominance. According to the Saudi Public Investment Fund's 2024 reports, the kingdom has allocated approximately $500 billion to projects targeting sectors where Dubai has historically led. To put that figure into perspective, it exceeds the entire economic output of Dubai itself. This is not casual competition. It is strategic positioning on an extraordinary scale. In effect, Saudi Arabia is attempting to construct a parallel economic ecosystem capable of absorbing much of the influence Dubai accumulated over the past 3 decades. To understand how this shift began, it is worth revisiting the timeline. In 2016, Mohammed bin Salman unveiled Vision 2030, a long-term strategy designed to reduce Saudi Arabia's dependence on oil and diversify its economy. The most striking announcement within that program was Neom, a futuristic city project valued at roughly $500 billion and stretching across regions of Saudi Arabia, Jordan, and Egypt. This was not presented as an ordinary development scheme. It was introduced as one of the most technologically advanced urban environments ever conceived, a city intended to surpass anything currently operating in the region, including Dubai. At first, many analysts regarded Neom with skepticism, even describing it as a grand but unrealistic vision. Yet behind the scenes, Saudi Arabia was assembling leading urban planners, architects, and infrastructure experts from around the world to turn the concept into reality. Between 2019 and 2022, the foundations of Saudi Arabia's competitive push became increasingly clear. One key initiative was the Red Sea project, a luxury tourism development worth approximately $16 billion, targeting precisely the same high-end travelers who have long supported Dubai's hotel and resort industry. Alongside this came Qiddiya, an enormous entertainment city valued at around $8 billion, designed to rival and potentially surpass Dubai's well-known leisure attractions. However, some of the most consequential changes were not architectural but social. Saudi Arabia began introducing a series of reforms that loosened long-standing restrictions. Mixed-gender public spaces were permitted, cinemas reopened, and the country began hosting international concerts and sporting events. These developments directly challenged Dubai's long-standing reputation as the Gulf's primary destination for entertainment and modern lifestyle tourism. By 2023 and 2024, the rivalry had become unmistakably direct. Saudi Arabia issued a powerful message to multinational corporations: relocate your regional headquarters to Riyadh, or risk losing access to lucrative Saudi government contracts. It was a decisive and unapologetic move. In practical terms, it represented economic pressure aimed squarely at Dubai's status as the region's primary corporate hub. At the same time, Saudi Arabia launched the Saudi Green Initiative, presenting itself as a regional leader in sustainability, an area Dubai had previously emphasized as part of its international brand. Tourist visa policies were liberalized as well, removing one of Dubai's long-standing advantages as the most accessible destination in the Gulf. Then came the global events. Formula One races, major boxing bouts, and large-scale music festivals were staged inside Saudi Arabia, drawing international audiences who once traveled almost exclusively to Dubai. The statistics now tell a compelling story. According to the Saudi Tourism Authority, the kingdom welcomed roughly 100 million domestic and international visits in 2023, a dramatic rise from just 40 million in 2019. By comparison, Dubai's visitor numbers have stabilized at around 17 million annually. The trajectory is difficult to ignore. Saudi Arabia's growth curve is accelerating rapidly, while Dubai's expansion appears far more gradual. One central factor behind this shift is financial capacity. Saudi Arabia's oil revenues in 2024 exceeded $400 billion. Dubai, by contrast, operates with a significantly smaller government budget. In practical terms, this creates an uneven contest. If one were to borrow a familiar comparison, it resembles David versus Goliath, except this time, Goliath possesses an almost limitless supply of financial resources. Dubai must carefully balance public finances and depend heavily on private investment. Saudi Arabia, meanwhile, can fund ambitious projects for years, even decades, without immediate concern about short-term profitability. This structural difference matters enormously. Dubai's developments often rely on debt financing and investor confidence, while Saudi Arabia's projects benefit from direct state backing and vast sovereign wealth. When global economic pressures emerge, Dubai feels the strain. Saudi Arabia simply absorbs it. Geography further strengthens the kingdom's position. Saudi Arabia controls roughly a quarter of the world's proven oil reserves and sits strategically between the Red Sea and the Persian Gulf, granting it significant influence over major trade routes. Dubai, by comparison, has traditionally functioned as an intermediary, a commercial gateway connecting businesses to the wider region. But if Saudi Arabia becomes the direct center of investment and commerce, that intermediary role becomes far less essential. In simple terms, global businesses may begin asking a straightforward question: why route trade through Dubai when they can deal directly with Saudi Arabia itself? And it is precisely this shift that now challenges Dubai's long-standing position as the indispensable trade and business hub of the Middle East. The strategic impact of Saudi Arabia's moves has been swift and measurable. According to reporting from Reuters, more than 44 multinational corporations shifted their regional headquarters from Dubai to Riyadh in 2023 alone, responding to the kingdom's clear ultimatum. These were not minor players quietly relocating offices. They included global banking institutions, major technology companies, and leading consulting firms. Precisely the organizations that once formed the backbone of Dubai's corporate ecosystem. Each departure compounds the challenge. Dubai's network advantage diminishes, while Saudi Arabia steadily consolidates its role as the new regional center for corporate activity. Within Dubai's own business community, the tone has noticeably changed. A senior tourism executive, speaking anonymously to Bloomberg, put it succinctly: "We're not competing with another city, we're competing with an entire country. And that country has virtually unlimited resources." This view is increasingly echoed across boardrooms and professional circles throughout the emirate. Where confidence once defined Dubai's trajectory, a more cautious narrative has emerged. On professional networks such as LinkedIn, executives are openly debating the changing landscape. One observed that clients now pose a stark question: why establish operations in Dubai when Saudi Arabia offers similar services backed by government guarantees? Another pointed out the shifting financial calculus. Saudi incentives for corporate relocation, including tax breaks and state-backed support, are beginning to make Dubai's traditional advantages appear modest in comparison. These are not isolated opinions. They reflect a growing mainstream concern within the regional business community. Cultural momentum is shifting alongside financial trends. Travel influencers and tourism bloggers, once heavily focused on Dubai, are increasingly highlighting Saudi Arabia's emerging destinations. On social media, the hashtag SaudiVision2030 has amassed roughly 2.3 million posts, compared with approximately 1.8 million for hashtag Visit Dubai. 5 years ago, such a comparison would have seemed improbable. Today, it signals that cultural influence is increasingly following financial influence. Investor behavior provides perhaps the clearest indicator of the shift. Dubai's property market, long regarded as a cornerstone of its economic model, saw foreign investment fall by approximately 23% in 2024. In contrast, Saudi megaprojects, most notably Neom, attracted over $200 billion in international commitments. Capital, as any economist will tell you, follows opportunity. And in the current climate, a substantial share of that opportunity is moving towards Saudi Arabia. At the structural level, Dubai faces a deeper challenge. Its economy rests on 3 pillars: finance, tourism, and trade. Saudi Arabia is now competing directly in all 3 sectors with formidable financial backing. Banks are expanding operations in Riyadh. Tourists are being drawn to Saudi mega-resorts, and regional trade increasingly bypasses Dubai, routing through Saudi ports. Each of these shifts undermines one of Dubai's traditional strengths. Debt further complicates the picture. Dubai's government debt currently stands at roughly $140 billion. By contrast, the Saudi Public Investment Fund, the sovereign wealth vehicle funding these initiatives, controls assets valued at approximately $700 billion. Put plainly, Saudi Arabia has roughly 5 times Dubai's debt load available as investment capital. This disparity dramatically changes the competitive dynamic. Dubai must service existing debt while simultaneously raising new capital to maintain its relevance. Saudi Arabia, by contrast, can fund ambitious projects without external borrowing. Industry analysts now suggest that by 2030, Saudi Arabia could manage up to 60% of the regional business activity that currently flows through Dubai. If accurate, this represents more than competition. It is a fundamental shift in economic gravity within the Gulf. The ripple effects are already visible across industries. Several major airlines are adjusting routes to prioritize Saudi destinations, and even Emirates, Dubai's flagship carrier, faces competition from a new Saudi national airline heavily subsidized by the state. Changes in aviation inevitably influence tourism flows, business travel patterns, logistics networks, and investment decisions. The financial services sector provides another telling example. Major international banks, including HSBC, JP Morgan, and Goldman Sachs, have expanded their Riyadh operations while maintaining smaller Dubai footprints. The signal is unmistakable. Financial influence is migrating north. Even Dubai's real estate sector is affected. Developers who built Dubai's iconic skyline are now pursuing multi-billion-dollar projects in Saudi Arabia. Emaar, the company behind the Burj Khalifa, is a prominent example. The very expertise that established Dubai's reputation is now being exported to a competitor. Perhaps most strikingly, Dubai's leadership was not caught entirely off guard. Vision 2030 was announced in 2016, giving the Emirate 8 years to prepare for a new competitive landscape. Yet, rather than fundamentally rethinking strategy, Dubai largely continued along its existing path: more luxury developments, higher tourism fees, and a continued emphasis on its role as a regional business hub. In hindsight, this approach appears to have underestimated Saudi ambitions. Could Dubai have pursued a different strategy? Analysts suggest it might have focused less on luxury and more on accessibility, positioning itself as the affordable gateway to the Middle East, rather than competing directly with Saudi mega-projects. Maintaining lower costs and larger visitor volumes could have preserved a distinct advantage. Others argue Dubai could have leaned further into its cosmopolitan identity, reinforcing its reputation as the Gulf's most open and internationally integrated destination. For years, Dubai benefited from its perception as a liberal alternative within the region. But as Saudi Arabia accelerated social reforms, that distinction narrowed significantly. Today, Dubai is emphasizing artificial intelligence and technology as the next stage of economic development. Yet Saudi Arabia has already earmarked over $100 billion for comparable sectors. Dubai's approach increasingly appears reactive, responding to Saudi initiatives rather than setting the agenda itself. The likely outcome is not collapse, but redefinition. Dubai will remain a global destination, but its era as the undisputed hub of Middle Eastern commerce and tourism may be coming to an end. In future terms, Dubai may resemble Las Vegas in comparison to New York, influential and prosperous, but no longer the primary center of gravity. For travelers, this rivalry may bring benefits, lower prices, new attractions, and more ambitious tourism campaigns. In the short term, consumers may be the main beneficiaries. For investors, the equation is more complex. Dubai offers established infrastructure, a predictable regulatory environment, and decades of international business experience. Saudi Arabia presents vast growth potential backed by significant sovereign wealth. Many investors are hedging by maintaining positions in Dubai while expanding into Saudi Arabia. Strategically, this reflects a broader pattern. Nations with strategic vision and sovereign wealth are reshaping regional power structures. Dubai's current challenge may foreshadow pressures facing other city-based economic hubs globally. Saudi Arabia appears to be playing a long, calculated game akin to chess. Dubai, by contrast, is still adjusting to the new rules of the board. As these developments unfold, the balance of power in the Middle East is quietly, but unmistakably, being rewritten.